Good afternoon and welcome to the market closing on our collab show between Business Today and India Today Television. I'm Sakshi Batra. It's 3 p.m. and we are here to get you all the market closing action. Let's first take a look at what's hot in the corporate and the financial world. Andhra Pradesh signs $15 billion deal with Google, largest in South Asia, to build a 1 gigawatt AI and data center hub in Visakhapatnam. Adani Enterprises and Bharti Airtel join as partners for India's biggest data campus. LG Electronics India makes a blockbuster stock market debut, listing at 1,715 rupees per share, a 50% premium over its 1,140 rupees issue price. Remember, the market cap has now surpassed the Korean parent as well, marking a historic milestone. Gold and silver on a joyride. Prices hit record highs on MCX as global demand surges. In New Delhi, we are seeing 24-carat gold prices are now trading at 1.26 lakh rupees per 10 grams. Silver is at around 1.88 lakh rupees per kilogram after the dream rally. International gold and silver spot prices, although, have cooled off slightly. Stock market slipped from early highs on weekly NSE expiry. Sensex is down by 500 points and the Nifty is now below 25,100 odd mark. The mid-cap and the small-cap indices have fallen by 1%, with metals, PSU, banks, pharma and consumer durables dragging in trade. Tata Motors shares have adjusted for demerger of its commercial vehicle business. Shares opened at 400 rupees after a special price discovery session this morning. The 1:1 demerger has created two entities now. Tata Motors Passenger Vehicles, which is now reflected in the stock price today, and the other company, Tata Motors Commercial Vehicles, which will be listed separately on the stock markets approximately a month later. Let's straight away look at how the markets are trading at this point in time. Well, all the sectors have actually come under now pressure. And remember, it's the weekly expiry of the NSE contracts. Although we are seeing some moves among the stocks from the pharma pack, from the IT pack, and even from the metals pack as well at this point in time. Max Healthcare is the top mover. You have Wipro, Tech Mahindra from the IT pack, Apollo Hospitals again from the healthcare basket, Power Grid, ONGC, and Bajaj Auto as among those top movers in trade right now. On the downside, however, you have Dr. Reddy's, Bajaj Finance, Bharat Electronics, NTPC and Tata Consultancy Services as among those stocks that are down in trade. But it's time now to welcome our guest on board, Mr. Arshu Madan, the MD of JM Financial, is now joining in to share with us his views on the markets. Warm welcome to you, Mr. Madan. Thank you so much for taking the time out. Season's greetings to you for the upcoming festivities of Diwali. Tell us, why is the festive cheer missing on D Street, but?
So Sakshi, thank you for having me first of all, and another thanks to you that for not asking me what is the view on gold and silver, because that's what most of the clients and family members are asking nowadays. Nobody's talking
Yes.
about equity markets. So see, Sakshi, I mean, good thing is that there is a continuity, and we've been talking since last couple of fortnights. So it's in the range. Market is not going anywhere. Market, the only thing, it's like that Trump and tariff would not let you live, and domestic flows and mutual fund and retail will not let you go down. तो वो ट्रम्प हमें जीने नहीं देगा और रिटेल का पैसा हमें मरने नहीं देगा. So that's what is happening in the market. So we'll continue to hover around the broad range of 24,500 and 25,500. Sakshi, the interesting thing will be at 20,500. Some things or nothing will happen, and you will see a correction of 500,000 points, and you will keep wondering that what has happened, that we have, I mean, corrected. And suddenly, without any reason, there's a pullback also. I think it has happened multiple times in the last few months, and probably it will continue to happen multiple times in future also. So net in net, we are not going anywhere. Plus also, Sakshi, very important thing is that earlier the extreme longs and shorts, we used to conclude a view that there could be a short covering in the market or there could be a profit booking in the market. Now the new normal is that the extreme shorts and extreme longs can continue for long. So that is what is happening in the market. And between that, I mean, some sectors here and there. So in a broad range, Sakshi, we'll keep talking unless it breaks out either side. We are not going anywhere.
We're not going anywhere. Well, although, Mr. Madan, you do see that the secondary markets are kind of lackluster at this point in time. You marked out the reasons for us as well. But it's the primary market that is actually seeing a lot of spark this festive season. Look at what's happened with LG Electronics, a 50% subscription, 54% subscription, 50% premium of a listing. And, the investors are a happy lot, although a few of them only got the allotment. And that's the biggest kind of a grudge at this point in time among most of the investors, that they did not get the allotment for this, outperforming IPO at large as well. In fact, with this kind of a surge, we've seen LG Electronics, the India company, now surpassing in market capitalization vis-a-vis the Korean major as well. So how are you looking at this exuberance in the IPO space, and what was your call now on LG, sir?
So Sakshi, this is a lesson learned for everyone, that when the company or fundamentals are strong and there is a right valuation, there are takers also, and the profit will be made. So I mean, hats off to LG for coming out with these valuations. Otherwise, we keep blaming. I mean, majority of the IPOs we are seeing, we keep blaming merchant bankers, promoters, or probably the people they are not aware of. So I think thanks to LG for reviving that sentiment, and that's not euphoria. I mean, that's a real money which have been made, and it is very heartening to see genuine retail investors making money. Otherwise, I mean, 60-70% of the IPOs in recent past, people have been stuck.
Yeah.
So I think it's a lesson learned for, I mean, it's a lesson for everyone, that if there's on the table, I mean, IPO market can really expand this market, and one should use that tool, but not to just, make fool of a retail investor.
Absolutely. One more question on the IPO space. How are you looking at this divergent trend between what happened with Tata Capital? It's today slipped even below the issue price as well, and what's happened with LG Electronics. And how should investors therefore decide, out of even large conglomerate names that are coming up with the IPOs, where to put in their money?
See, that is the problem, Sakshi. Again, the valuation. People get carried away by the marquee name attached to it, and that is where they have to consult a professional advisor for the valuation. See, all said and done, what is the problem in our market since last, 4 quarters or 5 quarters or 6 quarters? It is the earnings and valuation. So ultimately, the thumb rule, or probably the real mantra, or probably the sacred thing, is valuation and earnings. If those things are not supporting you, I mean, for a short while we can see some exuberance, we can see some kind of a spike, but ultimately that is the backbone, that is the platform. The market has to be built on that. So I think next couple of quarters are very crucial for the recovery to be seen in the market. Other than that, it is very difficult, and same goes for the IPOs. I mean, as I said, that LG has given us one of the prime example. If the valuations are right, and if you leave something on the table, this exuberance can go much higher also. But people get dejected because when they get stuck in the most of the companies. And Tata Capital again is a prime example of a company which is a brand in its own. And in any case, all Tata Group, majority of Tata Group stocks are struggling. But if you look at, I mean, not just the listing, Sakshi, I mean, I'm sure you're tracking this market. I mean, at much higher valuation, people have bought that stock in an unlisted market. So what kind of losses they are nursing on to? So again, for example, there are 2 or 3 success stories. They get floated around the WhatsApp industries, glorify those success stories, and then there are other 70% that people get stuck in. And Tata Capital is one of the prime example of that.
Okay, got that. But the Tata Group is also in focus today and has been over the last couple of sessions for a lot of developments as well. The other stock from the Tata Group that's in focus today is that Tata Motors shares have adjusted today following the demerger of its commercial vehicles business as well. Now, right in the morning when people saw the prices slip by 40%, they were, caught unfound. And that was the reason was that the company has now split into two. Tata Motors passenger vehicles business is now, the price discovery happened this morning. It opened at 400 odd levels, right now trading at 395. Remember, the commercial vehicles business is going to be listed later. But I have my colleague Chetan Bhutani, who's now joining in on the show with me to help us understand, and all our viewers as well, what exactly should one be really looking at. The stock markets, of course, are trying to adjust to the prices at this point in time. But Chetan, Tata Motors will be split into two different companies, which means investors who have had Tata Motors shares in their portfolios will be getting one free for one each held for Tata Motors passenger vehicles business eventually. And of course, we'll be waiting by maybe in a month or so, we will get to see how Tata Motors commercial vehicles business also gets adjusted. But tell us, what is the kind of expectation that investors must have from both these businesses now?
Well, Sakshi, let me break it down very simply for our viewers. Tata Motors has now officially split into two companies. One is for the car, which is the passengers and EV, and one is for trucks and buses, which is on the commercial vehicle side. From 1st of October 2025, this would be called the Tata Motors Passenger Vehicles Limited. That's the companies whose shares majority of the people hold. Well, the truck and the bus business will become a separate listed company later. So shareholders of Tata Motors will also get shares in the new company once that it is listed. And for today, 14th October is the record date, meaning that stock exchanges has officially, recorded the rate at which the prices of Tata Motors share has been listed. So it's completely normal. Nothing for the consumers or the shareholders to be worried about that the company has lost its value. In fact, on the contrary, it's good news because eventually, with times to come, you would be getting almost like a free share for Tata Motors commercial vehicle business. Because if you hold a Tata Motors passenger vehicle business right now share, you actually get complimentary and the same amount that you hold for Tata Motors as well. So the total value of investments roughly remains the same. It's just that now you get one share, you get another share almost free. So it's kind of a good deal for the shareholders, and of course nothing to worry about as far as the consumers and of course the Tata Motors shareholders are present. So.
Okay, thanks a lot, Chetan, for that. Let me take this conversation to Mr. Madan and help our viewers understand, sir, when it comes to the choice. Now, there will be a choice of two Tata Motors companies to really look at from eventually after a month. Right now, it's only the passenger vehicles business that is getting a reflection on the stock market. So far, the kind of consolidated business in this year, Tata Motors shares have disappointed the street as well. They have remained in a very narrow band of a trade. What to expect from here on? Of course, shareholders who had the stock will have the luxury of having both the businesses in their portfolios. For those who may be now mulling to invest afresh, should they put in fresh money in Tata Motors passenger vehicles starting today, or should they hold their funds for the commercial business? Which business is doing better, and what stock performance did you expect on that front, sir?
Sakshi, incidentally, I mean, first of all, like you said, it has been in a range after 40% correction. I mean, we have seen 1100. After 1100, it has been in a range at 700 people. I mean, stuck at higher levels are already creeping. But to come to the point, I mean, Sakshi, the real bread and butter or probably uh, the alpha beta for Tata Motor is the JLR business. So, I mean, one has to keep a track on that business. Otherwise, in the past also, Tata Motor was underperforming for many years. It was one of the laggard of Tata Group. But once JLR started doing good COVID and post-COVID, and we have seen the kind of unprecedented run-up in Tata Motor. And likewise, there was a correction of 40%. So I would say that somebody who has to bank on the JLR business because that's where the real valuation lies in, and that's where their strength is. So if that business is doing good, I mean, I don't think so. Commercial vehicle should be a very fruitful business at this point in time. I mean, passenger vehicle and that too led by JLR. So I think the moving part is probably JLR, and if that business is doing good, then probably Tata Motors passenger vehicle business will do good.
Okay, fair point. So that's the suggestion that you have, viewers. Now you've identified where the opportunities can exist in case you've been looking at this new development as a trigger point for you to look at both these companies as an opportunity as well. But the earnings season is also now gathering pace, viewers, which started off last week. Today we've also had Anand Rathi Wealth's earnings reaction that we have seen for the stock as well. Strong Q2 earnings, net profit jumping by 31% and AUM at 91,568 crore rupees. In fact, we've had an exclusive earnings conversation which my colleague Shail Bhatnagar has done with Anand Rathi Wealth's joint CEO Firoz Aziz as he's decoded the key drivers behind the strong earnings as well. Let's listen into what he had to say.
There are four legs of growth. One is clients' return increases my revenue. If my clients make 10% return, next year my earnings is automatically growing by 10%. That's the first leg of growth. Second is more clients per RM. That also contributed significantly. We hit the maximum number of clients you acquired in a month, which was 200. We did that. So rate of client acquisition has gone up. Clients giving us more wallet share. We don't force people to start big. We tell them you start with 1 crore as long as you have 10 crores to give us. If we do our bit, you will give us more money. So penetration also played a very, very key role. New RMs didn't play so much of a role because we didn't expand our team so much because we wanted to bite as much as we could chew. So 3 cylinders out of 4 fired, and that's where the 31 summed up to.
Mr. Madan, how are you assessing some of the earnings that have already come in? We've had IT majors and now Anand Rathi Wealth, one of the early ones. This stock has definitely been an outperformer, a wealth creator from the time it came out with the IPO. And, you know, you were alluding to it that there are very few IPOs that have actually done really well in the stock markets in the listed sphere. And this is one of them as well. How are you assessing some of the earnings that have come in? Anything that stood out for you?
Not really. I mean, they're all in line with the expectation, muted, nothing exciting. But at the same time, the good part is, I mean, it is just it's an onset of a season. So I'm expecting that there should not be any accidents. But talking about this wealth business, so Sakshi, I mean, now as far as market infrastructure stocks are concerned, also, I would say that there are now, they should be further segregated into two buckets, which is, I mean, a broking-led business and a wealth business. So what we have seen in the past is, I mean, you see the reports of how many demat accounts are getting closed and all these discount brokerages. I mean, lakhs and lakhs accounts of getting inactive. I mean, that's because the closure of that bank nifty expiries and virtually, I mean, after that, the market correction. I mean, a lot of people are getting disillusioned by this direct trading of the market.
Yeah.
But at the same time, the beneficiary of this is they don't want to leave the market. They understand there's a market, but they started realizing that the skill set to trade in derivatives and futures and future and options market and probably being an active trader is a difficult task. So that AUM is being shifted towards mutual funds and probably PMS and wealth products. So at the same time, within the basket of market infrastructure stocks, one segment probably is doing better and the other segment is struggling. I mean, you would have read the tweets which, I mean, Zerodha keeps coming out with that the kind of struggle everyone is facing. So now that again, I mean, the buzz is back about the closure of weekly expiries. I mean, that is something a very, I mean, bad sword hanging on us, whether they are to be closed or not to be closed, or when to be closed, or how to be closed, or I mean, too much of speculation is happening, and one media channel comes up with X report, and another media channel comes up with a Y report, and then SEBI comes and denies everything. So I don't know what is happening on that, but that will be one decisive thing, Sakshi, going ahead, which will decide the future of probably exchange and broking-led stocks, which is very important. That I mean, one should get clarity on that.
Absolutely. One must get clarity on this entire space, and capital market stocks, brokerages and AMC is definitely in focus because of that. Let me also ask you on the IT sector that started to report its numbers. What's your sense here? Do you think there is some amount of green shoot that is visible at this stage? We have seen already many quarters where muted set of numbers have already come in. This time around, slightly better than expectations for both TCS and HCL Tech on some parameters that we saw. Would this change in terms of how one has been looking at the IT sector amidst all this underperformance? Will the ball start to move again?
Not really. I mean, as you rightly said, slightly better, and that slightly better is also because of the very muted expectations and price correction. So again, they'll probably. I'm not saying that they'll go down, but they'll be consolidating in this range only because now another disruption is AI. How things pan out on AI front, which companies are embracing it and converting it and using it, and so it's a very difficult. It's a space which is very difficult to predict right now, and there would be certain pockets which will emerge heroes out of it, and many of them will keep struggling also. So how they shift their focus and probably are able to achieve through AI what is happening in the market, but that's a very big disruption everyone is facing, and the things we'll all witness how it gets unfold.
Absolutely. Absolutely. Since you talk about AI and the new technologies, what we are seeing today also, viewers, is that the biggest ever investment in South Asia has taken place. Google has actually announced a $15 billion investment in Visakhapatnam. This investment is planned jointly with AdaniConneX and Bharti Airtel. This will be spread over 5 years. Google will set up a 1 gigawatt artificial intelligence data center in Vizag. And according to Google, the infrastructure will be the largest for its AI operations outside of the United States of America as well. Now, state officials had earlier also estimated the investment at around $10 billion for the one center, one which is expected to generate around 1.9 lakh jobs as well. And that's what is clearly in the focus right now.
It's the largest AI hub that we are going to be investing in anywhere in the world outside of the US. It represents a capital investment over the next 5 years of $15 billion. And will scale to multiple gigawatts. It is a part of a global network of AI centers in 12 different countries, but it is, as I said, the largest one that we will be building anywhere in the world outside the US. In addition to that, we're also pleased that we will be making Visakhapatnam a global connectivity hub. We will house data locally to meet sovereign AI requirements. We will bring our own models, and by our own models, Gemini, Imagine, Veo, and all of our models, as well as our AI platform and the ability to build agents and applications with it. So it's designed to provide a full AI infrastructure, and it is designed to serve not just our own needs, but the needs of entrepreneurs, enterprises, and commercial organizations here in India.
All right, let's actually go across to Mr. Madan now. Since you've been talking about the entire AI-led disruption, we're also seeing that India is also welcoming global tech giants to also expand their AI presence, set up data centers back home. This actually is a major shift that's taking place. Have you been assessing this as also an opportunity for market participants as well, as a theme that could be the next gen theme or the next 5-year, 10-year kind of a theme that could emerge? And therefore, have you already started to put some amount of funds into this theme?
Yes, Sakshi. I mean, this theme will not, I don't know about 5-10 years, but next couple of years, as far as market perspective is concerned, this will be the buzzword. I mean, it's a new kid on the block. Like a couple of years back, it was EV, and then it was semiconductor. So now it will be data center and AI. So obviously, this is the buzzing sector. And immediately for next 2 years, I think the data center stocks and probably these AI-led stocks will perform well. Obviously, at the end of the day, the results will come after 3 years, 4 years. Who will survive? What will happen? But I think next couple of years, this is an exciting space to be in, and then definitely an opportunity also.
Any key stocks that you are bullish on, sir?
Right now, I mean, because of compliance, I won't be able to talk about stocks. But as a sector, I can certainly say the next 2 years could be buzzing, and one should use this opportunity instead of nursing the doubt. Because the first mover advantage one should never lose.
One should never lose. All right, 1 minute to go before the market shut shop. So we'll focus on the market closing bit now. 103 points lower in trade, 25,121. At this point in time, as far as the Nifty is concerned, all the sectors, viewers, have slipped into the red, come under some pressure on the weekly options expiry of the NSE. And you can actually see a 2.7% uptick for the India VIX as well, which are the top movers. Well, there are a handful of them, about 10 odd stocks that are still holding up into the green at this point. Towards the end of the session, we have Max Healthcare, Tech Mahindra, Wipro from the IT pack. We also have Apollo Hospitals, Bajaj Auto. It's among all those stocks that are holding up among the top movers. Some banking names like ICICI Bank, maybe even HUL that's holding up. But a large part of the Nifty stocks have actually slipped lower. You have Dr. Reddy's from the Pharma pack, Bajaj Finance, BEL from the Defense pack, Trent. You also have TCS and Tata Steel, Tata Motors. At least 3 of the stocks are from the Tata Group that are among the top 10 losers in trade at this point in time. And there you go. It's 330, 25,122, 104 points lower in trade. But we did have some movers from the Nifty 500 basket as well today. We had a lot of them, up and about in momentum. We had, of course, LG Electronics, the debut stock that ends the session with about 47% gains. Of course, after the premium listing, it did not go higher, but it managed to hold on a large part of that move. MTR Tech also 11% higher. Landmark Cars about 10% up. CE Infosystems continues with its up move, another 10% odd move here. Kernex Microsystems, we also had names like Websol, Vikram Solar, along all of these stocks that also pulled up into the trade as far as the Nifty 500 movers are concerned. But remember, it's the Diwali season and we are getting you top market masters also share their views for the new Samvat in our Diwali special edition of Market Masters. Vijay Kedia, the MD of Kedia Securities, in an exclusive conversation with my colleagues Bhabakaya and Shail Bhatnagar, revealed that the sectors he's going to be betting big on in the new Samvat. Let's listen into that.
Sectoral wise, Vijay, structurally, where do you see things shifting? Which are the themes that you're most optimistic about?
I personally feel now that this tourism industry should do well in India because we are actually lagging behind. People go abroad, and today also I read some article in newspaper. I don't know how many billions we are spending and going abroad and seeing that Tuta building or ye or wo, so many things we are seeing. I think India has everything. India has got heritage also. India has got beaches also. India has desert also. India has greenery also. India has parks also. India is everything, architecture also. But the only problem India has, that is the lack of infrastructure. We do not have the good infrastructure, good connectivity, good hotel, good hygiene, and maybe the lack of marketing. People don't understand their own heritage. So this is what I feel now government is awakening, and now government is connecting. 3-4 days back, I read somewhere that government is what you call making over or whatever they are doing, some 1,400 railway stations they are modernizing or something like this. Now connectivity of this airports are also rising. So I think India has all these ingredients to become a tourist destinations, not only from the domestic travelers, from abroad as well. So I think tourism industry has a good future. It's a sunrise industry, if you ask me. And so many companies will be benefited with maybe airport or maybe airlines and maybe hotels, but none of them are cheap. Let me tell you, if you valuation wise, none of them are cheap. You know, because I usually have a tendency of investing in cheaper company like below 10 ka P or 7 ka P, 6 ka P or 12-15 ka P. So those things are not here. So you have to take a call. You have to take a risk. If market will fall, they will also fall. So that's what tourism, one thing I like. And second thing, I like hospital industry because the awareness is rising. People now want to keep themselves, healthy. And people are understanding now by and by the value of good health. So I think this, and there is consolidation is also happening in hospital industry. So many overseas are coming and VCs are coming and investing in Indian hospital industry. So new technology will come and new money will come, which will expand the capacity of the beds and all and technology. So I think hospital industry should do well. But again, none of them are cheap. All are quoting above 30, 40, 50 P. So that one has to take a call according to one's their own mental capacity.
All right, that was Mr. Vijay Kedia. Let's go back to Mr. Madan. Mr. Madan, Vijay Kedia is betting big on the tourism space. Are you also bullish like your friend is on this sector, or are there other sectors that you're betting big on for the new Samvat?
Yeah, anything to do with, discretionary consumption, we are positive on. And to add to what he said, we are bullish on these online retail portals also, like Eternal, Swiggy, Nykaa, Paytm, and Sakshi. You will see, Blinkit started with one of the small subsidiary kind of a stuff, and now it has become a part of our life, and it will become indispensable in the times to come. So stuff like that. So wherever there's an audience, huge audience, and they are very happy. So those kind of platforms, retail platforms, are the way to go. So these are the stocks one should accumulate, hold with patience for a couple of years, because they are there to remain, probably expand, become much bigger, and you will not even realize that where the stock prices have gone. Time flies, something like that. So Sakshi,
Can one
these are the
still
all retail.
invest? Can one still invest at these levels?
Yes,
Okay.
absolutely, Sakshi. Anything, as I said, that all these Eternal, Nykaa, Swiggy, even Paytm, in spite of, all the controversies, went down, came up, and people will keep nursing their doubts that whether it is right to invest because it is already up, Eternal is already up. As long as you're doubting, you are missing the bus. So somewhere you have to take a plunge, and I would say these are the stocks which you can they're tangibly, you can see what is happening. How have they penetrated, into our lives and become indispensable. So these are no-brainers. Obviously, as he rightly said, things will be expensive, but they'll continue to be expensive.
Fantastic. Thank you so much, Mr. Madan, for being with us. Happy Diwali to you. And that's a wrap, viewers, on the Business Today show. And in case you too have any questions about the investments that you have in stocks or gold or in mutual funds, then send them to us on the number flashing on your screens. And don't forget to catch the market opening action tomorrow morning at 9 a.m. with Abba Bakaya.